All right, everybody, what's going on? This is Scott Garber and Andrew Petcash. Man, AP, we are getting deep into the weeds with these live podcasts. Excited to bring on our good friend who's just across the state, Justin Driscoll from Lead Sports. So, Justin, my man, welcome to the Profluence Community and Podcast. How you doing today?
Hey, thank you. Appreciate you having us. Other than crappy rain down in South Florida, I cannot let it ruin the day. So all is great over here.
I was going to say, it's a lifestyle living here in Florida. You just know what you're signing up for.
Exactly.
Well, listen, we're going to unpack a lot. We got a lot of ground to cover today. So, Justin, let's just level set the playing field for everybody. Who are you? What are you doing? Why are you doing it? Give us a little peek under the hood to who you are.
Yeah, absolutely. So quickly on myself, both professionally and personally, I grew up playing college baseball, went to school for baseball and happened to go to school at the same time, but really had the opportunity in the middle of COVID to reflect what I was doing. And in that, while I was wrapping up a graduate degree, getting my MBA, I stumbled upon an opportunity here in the local network to work for a family and a company that was essentially acquiring youth sport businesses at the grassroots level in two sports, baseball and softball. And the family was single funding the entire project alongside a laundry list of baseball industry operators. It was a perfect mix. It was my first exposure to startup, but it was the most unique exposure to startup because you don't have many businesses that are self-funded by one person. So supported wearing multiple hats from strategy, finance, ops, and taking part in a bit of the acquisition roll-up strategy. I would say 2 or 3 years before now what private equity is doing. So definitely a little bit ahead of their time. But what was most fascinating about the company was they're acquiring this cash cow, using that profit to reinvest into a technology company. And that was really my level set into the industry of technology and scalable startups. So they were using profit to build this hardware business that was optical ball tracking for baseball and softball. They then had the distribution of downstream youth sports, which is all super exciting things that company is doing now in today's form. But through that opportunity, was exposed to the entrepreneurship space, knew it was my passion, my calling. In just that small team setting that you grew up playing sports on, it was really just all I knew. Multiple hats, getting the job done by any means necessary. But when I started to jump into the venture side of things, I was very humbly offered an opportunity to work for Lead, originally a European company, coming to America back in 2020. I joined as the first U.S. employee when they came stateside in partnership with a few different partners to bring it to life. We're a global operation with offices now based in Berlin, Germany, and Orlando, Florida, investing across stages. So we as Lead stands for Legacy of Adi Dassler, founded by the grandchildren of the founder of Adidas, with the ambitions to extend the legacy of their entrepreneur identity of who their grandfather was. They set out and raised capital from various family offices, high net worth individuals, strategic institutions, professional athletes, to bring into this global venture corporation, which now invests out of a family of funds. So we write as small as 100K checks into the earliest stage at the pre-seed, as large up to 2 to 5 million at Series A and growth. Agnostic to geography, so we do invest globally with a bias towards America. Sectors are pretty agnostic to both sports and health. So we define sports very simply as the world knows it. But health, we started in the wellness world and consumer health and have found ourselves kind of opportunistically, but now strategically getting into the healthcare community as well, with the root that, the consumer patient journey is identical to what we've known the world to be. So I've been pretty active in that world, but continue to do sports. And it's a lot of exciting things. So our core business is a family of funds. What will be live once this podcast go live is a super exciting brand refresh of our entire ecosystem to tell that story a little bit more. We went to the world prior to my time at Lead as an accelerator program, and that was the epitome of why we started this and what the company was meant to do. And we've really just put more gas on fire with opportunities to invest across stages, get into the consulting space, the advisory space, and obviously some of the more recent strategic partnerships we've announced in the corporate side are just indicative of some of the early stage stuff that we do. So yeah, in a nutshell, me and Lead.
Love it, Justin. And thanks for setting the context on that. I guess now's a good time, especially with where a lot of people fall, not just here on the call, but also just in general in the industry. A lot of people coming in on the early stage side. Give us more into this pre-seed fund, what you guys are going to be looking at, what's you're excited about, how you plan to roll it out, how it's going to work. Give us the nuts and bolts of that.
Yeah, absolutely. And as many people know, our pre-seed activity is, historically accelerator. I believe that the nature in which, accelerators are designed to nurture businesses, support them in various ways to get them from A to B faster, are inherently identical to how we will continue to operate, just in the sense that we operate like a fund now. So we're on a rolling basis. We have about 100K checks looking to invest in about 10 startups per year. So, do the math, about 2 to 3 a quarter on a purely opportunistic basis. So where the family of funds is set up very institutional, our pre-seed stage is investing off our balance sheet, where we have the capabilities of speeding up, slowing down for the right opportunities. So, while we can pretend to be, thematic chasers and understanding the crystal ball of where the industry goes, I'd be saying we're liars. We're chasing the founders that are 2 steps ahead of us. If we knew the idea, we'd found it ourselves. So, my job over the last 6 to 12 months, and now looking ahead, is to go find the best founders building in the ideas that we believe will disrupt the industry. So, investing, pre-product, pre-revenue. We can do early product, early revenue, but nothing is too early. Our ambition is to find the companies that are aligned with what we want to see the world look like in the industry of sport and health, and obviously try to play a key part in getting them to that vision.
And how does this change from the accelerator? Like, are you less hands-on? Are you still the same amount hands-on? Or,
Yeah,
because 100K only goes, it's great, but it still, only goes so far. How do you sort of plan on balancing that out?
Yeah, it's a great call. I think, stylistically, at least how we're deploying capital is, we need to participate in rounds that have businesses seeing sufficient, pre-seed rounds, which typically look like, 12 months of runway, whatever that may be, from, 500K to 1.5 million, 2 million. We find ourselves being, more strategic inside rounds that look a little bit bigger than just an accelerator is a point in time. Our ambition is to follow the standard round cycle, so that we're coming in, allowing the businesses to have time to be able to mature with access to our network. Something we saw with kind of more the cohort model was you had to accelerate introductions, even if the founder wasn't ready for it, or if the product wasn't ready for it, or even if that introduction took place, they didn't have enough time to evolve the insights to then take a second stab at it. And I think that was inherently the challenge with a cohort model. Was your dumping network and activations. Where moving forward, our idea is to hold that same level of intensity and excitement to activate within our network on a global level, but with the ambitions to stagger these portfolio companies out, where you're spending a little bit more intimate time when a founder might need it, versus then squeezing it into a time-bound nature of what a program typically consists of.
And on the healthcare, and Scott, you can roll after this. Of the 10, so you're doing 10 a year, 50-50 healthcare and sports? Could it be all 10 sports or all 10 healthcare, or where do you see that falling?
Yeah, I think if I'm to put a number on it, I'd say our ambitions is to be about 50-50, just because that's how, with the rebrand out and the refreshment of who we are, not just a sports tech investment firm, but really investing at the intersection of now the healthcare and wellness and health industry. Our ambition is to be 50-50 agnostic, and I think that's happened by accident. So if history tends to repeat itself, we'll probably follow that opportunity. But of the 4 deals we've done thus far, happened to be 2 sports deals and 2 health deals. So by pure accident.
Justin, real quick, you talked a little earlier around, sort of betting the jockey, right? And especially in this pre-seed side of things, and on the disrupting side of things, I'm curious. We see a lot of AI starting to move into the space. We're watching, new leagues and teams pop up. Like, what's got you most excited from the volume of deals that you guys are looking through? Where do you guys, sort of find those pockets of disruption that you're attracted to?
Yeah, it's a good question. In hype phases of certain buzzwords, whether it was Web3 and Metaverse 2 years ago to now, definitely the sports leagues and AIs are or top of list. I think something that we've held firm is investing in problems, like finding massive problem sets that have scalable potential to extend well beyond the industry they started. So in regards to what that looks like, I think too broad of a comment to nail down one example, but our ambition is to really find what are the problems in the industry and then go find the builders looking to solve those. And sometimes what we've experienced with these hype trends is that you tend to just follow the word, not follow the problem. So something that at least how we source are just absolute problem obsessed founders. Someone who inherently will not sleep at night until this thing is solved. And of course, the solution will look different. And we know that at the earliest of stages, the evolution of what this business will be and what it does will change. But inherently, we think the problem shouldn't. So, yeah.
No, it's super interesting. And this is sort of a personal take, but as we introduce new technologies and modalities to the space, we're almost creating new problems or highlighting new problems. So it's really interesting, what might have been a problem 5 years ago, we've now created a new one because of the advancement of the technology or, the involvement of the ecosystem. Just personal take on your side. What's got you most excited? Where, recently, what have you seen come across that's got the antennas?
Yeah, I think a lot of the stuff in human performance has been particularly interesting. The recovery modality, it's not a matter of if, it's just a matter of when. But really what we like to see are science-backed, real efficacy solutions that can change human behavior for the good, that can scale to various markets, whether that's the weekend warrior to the femtech population to the elderly community that are dealing with longevity concerns around muscle loss. We really like that kind of intersection of human performance because it sits quite at the intersection of our thesis. On the sports side, more personally, given my background, I've been spending a ton of time in the youth sports sector. The industry is for sure having its moment, so there's got to be infrastructure to support the rise of that world. And then so that's kind of a particular interest on the sports side, and then more on the standard health business. We're really looking at patient-driven outcomes, so things that can either democratize accessibility to care or increase the efficiency in which care is delivered. So, playing in kind of those two different thematic trends, human performance kind of sits right there in the middle.
Justin, curious on the financial modeling side at the pre-seed stage, or what you're looking for when you're digging into these opportunities, because I'm sure you're looking at decks or memos or certain things. How are you evaluating that, or whether it's the target addressable market, whether it's the where they see revenue in 5 years? How are you evaluating that, or what's good advice to founders putting that together? Because it's often it's a shot in the dark for both sides often.
Yeah, it's something I talk about with founders, both in our portfolio and just colleagues in this space quite often. Is I think a financial model, as number driven as it is, should be similarly a storytelling strategy to the way a pitch deck looks. And I think obviously we sometimes get caught up in the numbers. The way I interpret a financial model, at least internally at our organization, is it should be a look inside the head of the founder, whether he or she's ability to understand both the revenue side of the business and expense side of the business. I've been at this for 3.5 years now, and I don't believe I've seen one financial model to be true at the earliest of stage, and that's totally fine. And we understand that, but it is an opportunity to look in the head of the founder, both from an operational perspective, a strategic perspective, to understand what are the cost implications, what are the main drivers of the business. Is this a heavy marketing company? Does COGS increase too dramatically with revenue? So to us, it's used as just storytelling with numbers, which can be counterintuitive, but that's how we assess financial models at the earliest of stage.
Super cool. I'm going to go a little off the beaten path here, but I'm really curious. We had Adam on from Sports Radar last week, and so often we think about this from the venture side about jockeys that are solving problems, but then the market tends to open up and presents new opportunities. So, he enlightened us to, what was going on as we migrate from third party data into first party data, right? And the media side of sports has always been one that I think, we're trying to participate in, as there's a lot of liquidity there. I'm curious, like, I mean, as you start to see the market shift, which opens up new opportunities, to go ahead and earn in this space or retrain the behavior. How do you guys look at like a big pendulum move like that? And does that adjust your thesis when looking at, the media side of the business?
Yeah, totally does. And I think that the short answer is, we've surrounded ourselves with people way smarter than myself, and I can say that humbly. But we've intentionally, with the new structure of Lead as a global venture corporation, whether it's our shareholders, LPs with domain expertise, leaning on to those individuals and their experiences, have always been useful in how they see the world on a global level, both from a track record perspective in their own successful endeavors, but really what we're leaning on the most in terms of these pendulum shifts is the corporate partners we've worked with. So we're in the middle, rolling out a pretty exciting roster of corporate organizations as formal venture partners to our ecosystem. And the three, obviously, most notably that we could share that have been announced is Exos in the human performance space, FC Cincinnati in the MLS, Spartan Race this morning, and kind of the outdoor lifestyle consumer brand. And while it's not official, I could name the person on side my shirt today, NBA team, our close partners for the last 2 years, the Orlando Magic. These are our eyes and ears. They tell us what's happening in the industry. And of course, they have corporate strategy, corporate initiative to lean on. But most notably, they are inside the industry via their operators, whether from the innovation team, the strategy team, the marketing team. We're leveraging their insights to understand at least where we think the puck is going. We can have a viewpoint, but that is the benefit of how we've aligned ourselves with these corporate organizations who we believe, and we've hand selected as some of the more innovative organizations in the industry, to understand that they're going to be the first ones to innovate or be the first ones to adopt. And inherently, you kind of see that these ones will be the ones to drive whatever trends are in the media space, most notably. So I think that answers your question, but it's really leaning on those corporate organizations as a kind of driver to our insights to the industry, and then aligning what we believe are more the thematic or macro, business trends that are occurring.
Super helpful, man. And I mean, I want to ask one more question, and then we're going to open it up. I know some folks have some questions, but Justin, I'm curious, right? You guys are doing an incredible job with this entrepreneurial mindset to aggregate a lot of what's going on in the space. There's a lot of service providers in the space that want to work with portcos that you guys have, or that can come in and work with leads as a whole. How do you guys handle sort of that side of the marketplace and finding the right service providers to bring into your company? And create that relationship?
Yeah, no, I think what's very unique about our ecosystem is, with many sports or health focused VCs typically focused by stage, you have a very specific problem that every founder is solving, whether it's a rebrand, but at a hiring sprint. Because we are a stage agnostic venture corporation with family funds from pre-seed to growth, we have founders at every life cycle of business. So these service partners can evolve and grow with them, either flex up or flex down by stage. So, and how we think about our portfolio, which is now at the size of about 70 businesses across the funds, the idea is we will have a platform, defined as a center of excellence where we lean on, service partners to your extent, whether it's an accountant, a marketer, a designer, an engineer, a business advisor, to lean in and have this roster, a bullpen, using a baseball metaphor, that act as these opportunities, whether it's on their own credit to monetize their services, or step in as friendly advisors, which kind of leans on what we had set up and still have set up as a mentor pool of people just dedicated to support these founders and really aligned with whatever mission or passion that they so exist. So
no, it's so cool, man. It's a real community, right? And I think that's what this whole thing is. Like, sports is based around teams, and I could put on a jersey in Orlando and all of a sudden I have 100,000 new Magic friends, and I think that's the power of what we're doing, and it's fun to watch it seep into the business side of this. As we start to open it up, Justin, I know a lot of this is around democratizing access, right? And so as, some folks are going to ask questions, how do people get in touch with you, or how do they get in front of leads, so they can speak about their opportunity and, start to connect some of those dots there?
Yeah, pretty simple. Warm referrals are the best referrals. We love industry. This circle is so small. I already recognize familiar faces on this call that I've been lucky enough to meet over the last 3 years of my career, and so most recently. But with what we're doing over the last, call it, 2 years, we've been doing things quietly. We started as an entrepreneur project. Now, really, keeping that mindset, and that will always be a part of our DNA. We've definitely grown up in the sense that we're running an institutional global venture corporation, and our new website and our brand refreshment will make it much easier for founders, both on the family of fun side to then partners and operators on the service side, to find out who within our organization is the right person. For me, what I can speak on is I'm a principal at Lead. I focus on early stage activity. I underwrite just about any deal that comes in at the pre-seed seed stage. So that is a sweet spot, then come to me. And then of course, because we're such a nimble team, yet still global, the opportunity is, if you have a network relationship with one of us, we'll be more than happy to kind of facilitate you across the ecosystem, as we represent to be very large, but the team is incredibly tight knit, given that we still have a global presence, but many people in office too. So
1 degree separated from Thomas Rudy. That's what you guys need to know.
indeed.
All right, guys. Well, this has been really cool, Justin. I appreciate the insights. Want to open it up. Feel free to raise your virtual hand if you have any questions. Come off mute, and we have about 15 minutes if anybody has anything top of mind.
Yeah, Scott, it's Randy. I had put a note in the comment there. Yep. And it's not so much a question, it's more of a comment. Justin, thank you for being here. And I think in the past 25 minutes, you've taken what might be complex and you've simplified it in a way that I haven't heard too many people in your universe simplify it. So I appreciate that. And instead of hijacking this call, I'd like to reach out to you. I have something to share with you potentially. So would it be email? What?
Yeah, easy. Just justin@leadsports.com. So feel free to grab my email, and if you need it from either Scott or Andrew, feel free to get it from them.
Thank you for your insight. I'm excited by what you guys are doing. And you're in Orlando, is that right?
Yeah, based in Orlando.
Right. My daughter goes to UCF, so when I come up to visit her, we'll go grab coffee or something.
Amazing. Yeah. Happy to
Thank you so much. And Scott and Andrew, the show, podcast, whatever, keeps getting better and better. Thank you, guys.
Well, appreciate it. I'm going to start blushing on the screen with Justin. Anybody else have a question? I know some of us have earlier stage ventures. John, go for it, buddy.
Thanks, Scott and Andrew. Justin, it's a pleasure to meet you. Would you mind to tell us a little bit about the 4 companies that you just mentioned that you invest this year, like 2 in the sports and 2 in the health industry?
Yeah, happy to. And while we haven't announced any yet, I'll speak more thematically in terms of the
Justin,
trends we've backed.
Just so you know, we cut this off.
Totally fine.
Yeah. Just so yeah.
Yep. Okay, good to know. So obviously I could mention some of them. Actually, one of the founders is here. Michael Dubb with Sweet Chameleon was the first investment we piloted our new strategy on. So it's exciting to see him here. He's in the digital space, in the 3D printed digital physical collectibles. So good to have him on. And then in the last couple of weeks, we've executed some businesses. One in which is called, I'll hold off on naming it, but it's in the men's health space. Think the Hims of Europe. So we really like that idea of taking a replicatable business model with really interesting unit economics and sticky customers in a demographic or a geography that's really, really hard to penetrate unless you know the regulatory framework in Europe. So that was an exciting one. Most recently did a deal. The last 2 deals we've done, a commerce to content marketplace in the power sports community. So it's very a niche play. We love niches. I personally love niches. If you penetrate a niche, it's just as interesting as a really big opportunity. So that's a cool business. And then most recently, a business again in that kind of science-backed technology in the metabolic health space. So go to market in the clinical trial community, trying to quantify metabolic free state low energy using double label water, and then really scaling that to then potentially a consumer or a more broader human performance sports bet market. Yeah, so very broad. And then, even the opportunities that we've looked at, and still remain interested in, kind of fit across the spectrum of that thesis of sports and health.
Oh, thanks. Thanks, Justin. I just have one more question. Do you have any youth sports in your portfolio? Youth
Yep.
sport
So you are one of our more notable youth sport businesses to date is a business called Mustard, based out of Los Angeles, California. Started democratizing access, as we use that word probably a little too often, with computer vision, to enable kids to have access to the same level of coaching as the greatest minds in the sport, so that it's a biomechanic assessment of your pitching mechanics. So they started in baseball, launched in football for quarterbacks, and then most interestingly, or most recently announced a partnership with Golf Digest to do the same thing for every golfer. So no longer just rooted in youth sports, but Scott here in Tampa or St. Pete is able to now figure out why his swing is flawed or not, and then get some of the best insights from partners like Justin Rose, who will give them insights to what they're thinking, what they do. So still haven't been too active in this space. We hold a high bar for the community because youth sports is just such an interesting industry. AI will never replace it because parents will always take their kids. It's just such a fundamental piece of development of this next generation. So we're trying to find those tools around it, but that just kind of comes with time. So definitely eager to look at it more.
Appreciate that insight. Chad, I'm going to come to you in a second. Justin, we have quite a few racket folks here on the call today. And with you guys having USTA in your backyard, whether it's padel, pickleball, squash, just curious, with you guys having a global footprint, what's your thoughts on sort of the racket side of sports, and are you guys doing anything there?
Yeah, so we've invested in a company called Break Sports in the space of more the participation or the aggregation of opportunities for people to play these sports. And I think that's where opportunity exists. The media side's interesting, but to us, whether it's venture-backed businesses to enable the play of said sport that's clearly on a rise, similar to golf, I think we're seeing a lot of businesses, and counterintuitive to me as a venture investor, but I think there's so many companies in the space of paddle and racket that can be incredibly successful without the need for venture dollars, because obviously every founder knows the scale, the approach you have to take when you bring in that institutional capital. But I'm equally excited about businesses that are bootstrapped successful businesses, and I think in some of those pockets, especially youth sports, because that's what I knew prior to Leap, but definitely seeing similar parallels in kind of racket and golf industry as a whole, where maybe market size is hard to underwrite, 100x, $100 billion return for your investor doesn't mean it's a bad business. So I think that would be kind of my insight. You have to either scale outside of that industry to see venture return, or you got a really interesting business, just probably maybe not a fit for a venture investor.
Makes total sense. And there's a ton of viability in it, but that's, I think, a really good nugget there. As people are growing and scaling and looking for capital, right? Not all capital is created equal, and it doesn't all behave the same. So I think that's a really good point there. Chad, we got you, and then maybe time for one more, and then we're going to let Justin get back to it. So Chad Eichten, floor is yours, my friend.
Yeah, Justin, great to meet. Hello, team Profluence. Coming live from Los Angeles. Pretty cool. I saw you guys partnered with Exos, which was one of my first internships in college when they were Athletes Performance Institute back in the day here out in Carson. A buddy of mine from school actually runs their pro sports. Have you collaborated with Adam Ferrand at all?
Name doesn't ring a bell. We're with Craig Friedman and Lindsey Braun, more on the innovation side.
But like Randy, I mean, the wheels are spinning. There's a lot to share, but I'll be mindful of everyone's time here. But yeah, my background's in humor performance, so got a couple ideas that I would want to bounce by you and see whether there might be some potential alignment, especially in the health tech world. We got a huge program here in San Diego, Southern California, that there could be some synergy there too. So
great. Shoot me a note. I'm in Phoenix end of next week, then potentially coming up to San Diego. So if I have time, would love to meet up.
Wearing Scott's brand, Linksoul represent.
Let's
There you
go.
go.
I love it. Well, listen, guys, this has been incredible. Justin, you've given us some nuggets that I think we can all take back into, sort of our ventures. As we wind it down, I'm gonna put you on the spot. What's one thing as you look back at your tenure with Leeds that now that you wish you knew at the beginning that you can give back to our audience as they're going through their, entrepreneurial journey?
Mhm. I think, yeah, if I've learned anything, and it's easy to say this on the investor front, but like no one knows your business better than you. And that's something, you're going to get, hundreds of opinions through the venture process, how they, interpret your business. I think it's very easy to sway with where the, industry or the majority say your business should go. And sometimes the best businesses turn left when everyone says turn right. And I think sometimes the companies and even some of the people that I've surrounded myself with, I call it Joe DeSena from Spartan Race, the CEO. He's one of those ones who just says like, you have to go the opposite direction. And sometimes the founders that have proven me wrong and our organization wrong have gone that different direction. And in certain cases, we actually then went back and invested in the business. So I think we're not afraid of being proved wrong, but I think on the founder side, it's easy to just sway where you think your strategy goes based on kind of the feedback loop you're going to get in the fundraising market.
Petcash, any last words from your side?
No, I appreciate it, Justin. This was awesome, and we'll recap it, get it out, and congrats again on the rebrand and you running this. We're excited. I'm sure a lot of people from both sides will come through your program. I mean, I don't know if you're deploying 6 more over this year, but you're filling a big gap in space. Yeah.
Yeah, the bottleneck's real. So we're continuing to invest at the earliest stages and obviously do later stage stuff too. But yeah, rebrand goes out Thursday morning. So obviously everyone keep an eye out for it. Excited for the world to kind of see what we've been working on for the last 12 to 18 months. It's been a long time in the making, but look forward to it. So I appreciate everyone jumping on and spending their afternoon with me.
Yeah, man. Thanks for what you're doing for the space and community. Great seeing everybody. And until next time, have a wonderful day.
Yeah, appreciate it, guys.
Thanks, Joe.